Since the beginning of this year, the stock market has fallen badly. Most of the stocks are trading at their lower level from the peak. But do you know the stock price of Ruchi Soya? Currently it is trading at a level of Rs 1371. Do you know its trading price at the beginning of the year? It was at the level of Rs 17 in January 2020. That's 80 times return in just 5 months. Yes, you heard it right. Not just 2 or 3 times return. That's 80 times return. Doesn't it sound crazy? A lot of traders who missed this opportunity are now regretting. But the biggest question is, how can Ruchi Soya give 80 times return in just 5 months? What is so special about Ruchi Soya? Can it still continue to give such multi-bagger returns? Or is it a trap for retail investors? Let's decode the mystery of Ruchi Soya. Hi, my name is Sahil and this is my Personal Finance Academy where I explain money management in layman's language. So first discuss, what is Ruchi Soya company? Ruchi Soya is one of the largest manufacturer of edible oils in India. Some of the leading brands include Nutrela, Mahakosh, Sunrich, Ruchi Star and Ruchi Gold. It offers food products such as textured soya protein, soya flour, fruit juice and soya milk. Nutrela is the largest selling soya brand in the country with a market cap of more than 50%. So what is the story of Ruchi Soya? Ruchi Soya has been around for 34 years now. It was doing well in the past. However, in the last few years, the profits started falling and it started reporting loss. Ruchi Soya made continuous loss in the year 2016, 2017 and 2018. Eventually, Ruchi Soya ended up with a debt of Rs 12,000 crore and had to enter insolvency proceeding in December 2017 after it went bankrupt. The insolvency proceeding saw Ruchi Soya being bid for. Baba Ramdev Patanjali eventually won the bid war against Adani. A portion of the bid was used for clearing the debt and some was infused into the company. In December 2019, Patanjali completed the acquisition of Ruchi Soya with a capital of Rs 4,350 crore resolution plan. During the last 4-5 years, the share price of Ruchi Soya went down from the levels of Rs 40 in 2015 to the level of Rs 3.35 in the year November 2019. And eventually, Ruchi Soya was delisted from the stock exchange in November 2019. After acquisition, the share price of Ruchi Soya were diluted in the ratio of 100:1. It means if someone was holding 100 share of Ruchi Soya before acquisition, then post acquisition, the person was left with just 1 share. After acquisition, Ruchi Soya was relisted in stock exchange on January 27, 2020 at the level of Rs 17. Since then, the stock is on its dream run. The next question is, why would Baba Ramdev be interested in Ruchi Soya? The answer to this question lies in the already set up distribution channel of Ruchi Soya and 3.3 million ton per annum refining capacity across 13 refining plants in the country. 5 of these plants are port-based. The port-based refining plants are of huge significance as 70% of the edible oil consumed in India is imported. It makes it easier for company to refine the edible oil imported in the country. Now Patanjali is keen to expand its cooking oil business and want to leverage the distribution channel of Ruchi Soya. Patanjali has set high growth target in the near future and it's trying hard to expand its distribution reach to 500 million consumers by 2025 from current level of 200 million consumers. Now let's discuss the most important question. What resulted in such a huge increase in the stock price of Ruchi Soya? Since the relisting of Ruchi Soya in January 2020, this share is continuously hitting upper circuit, which resulted in increasing its market share from just Rs 500 crore to Rs 44,000 crore. And the biggest reason is huge gap between the supply and demand of Ruchi Soya shares. Currently, Patanjali hold about 99% of Ruchi Soya share and rest of the 1% is with public shareholders. It means that out of 29.59 crore shares, only 29.59 lakh shares are available for public trading. This has created a situation where there is a huge demand from investors to buy Ruchi Soya shares, but the supply available of shareholders willing to sell is very low. Moreover, Baba Ramdev has released few statements in the public regarding Ruchi Soya shares, which has even fueled the demand for this share. Currently, Ruchi Soya market cap is more than that of big players like Lupin, Torrent Pharma, Ambuja Cement, Tata Steel, Marico, Colgate Palmolive, etc. This gain in share price has got nothing to do with the fundamentals. It is a classic case of gap in supply and demand. In future, Patanjali has to increase the public shareholding of Ruchi Soya from 1% to 10% in the next 18 months. Further, minimum public shareholding has to increase to 25% in the next 3 years. It is a matter of concern that even after relisting Ruchi Soya in the last 5 months, Patanjali is still holding 99% of the share. By the way, the recent quarterly result of Ruchi Soya has been declared and company has posted a net loss of 41 crore rupees. Finally, I think the share price of Ruchi Soya is enormously overvalued and it is going to fall in the coming days and months. It can't sustain at current levels. In fact, it has already started hitting the lower circuit in the last couple of trading sessions after the quarterly results are declared. I would strongly advise the retail investors to do not fall in this trap and stay away from Ruchi Soya. Always invest in companies with strong fundamentals. Ruchi Soya multifold times jump is totally manipulative. Someone out there is creating a demand for Ruchi Soya shares, which is resulting in the share price jumping from rupees 17 to 1371 at current level. I think SEBI should investigate into this matter. In my previous video, I have done an in-depth analysis of companies like Asian Paint, D-Mart, ITC, Titan and Eicher Motor. I would recommend watching them, and if you like the content, do subscribe to this channel. Also let me know which company do you want me to analyze in the coming videos. Thank you.